Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
1490 WGCH. This is Carrie Lutz. You're listening to the Financial Survival Network. Time for another Triple Lutz report. I'm speaking to you on January 26, 2012. It is 10:35 Eastern Standard Time. Presently, the price of gold is about $1,725 an ounce. The price of silver looking at $33.38. But I'm not here to talk to you about the price of gold and silver going up. They're going up. There's no question in my mind. If you've been listening to my work, if you've been reading my show notes for the past 2 or 3 weeks, I told you my gut feel was that gold and silver were in the midst of a breakout. How'd I know this? I'm not a technical investor. I follow the charts, but I can't read them like people like Chris Vermeulen, Gary Wagner, Rick Ackerman, Peter DeGraff. They can look at these charts and they can form a sense of the direction of the market short term. And they can predict these breakouts with uncanny accuracy. No, that's not my thing. I'm more of a fundamental guy, but I do look at the technicals. I don't look at the technicals to form an opinion. I look at the technicals to give me more of an insight into the fundamentals. But what I have to say is far more important than this. Yesterday was a watershed event. Just around 6 months ago, Helicopter Ben Bernanke, chairman of the Federal Reserve, said that interest rates would be held at close to zero for another year, going into 2012, 2013. 5 months later, he's now saying zero interest rates are going to be the rule du jour till 2014. We're talking 2 more years, and they only did this 5 months later. This is a full-scale panic. It's a capitulation. Fed has acknowledged that nothing has worked, and if they were honest, they would admit that the U.S. and the world are in a depression. But they're not going to admit it. Instead, they're going to play games. They're going to keep kicking the can down the road. They're going to keep printing more money because that's the only thing they can do. If they were to stop money supply growth now, the U.S. government would be bankrupt within a week. That's the fact. Because 43 cents of every dollar that the federal government spends is borrowed, and about 80% of that is compliments of the Federal Reserve. Maybe it's not 80%. It's a substantial number. Take my word for it. The reason why January 25th, 2012 is such a significant date is a global realization that the economy is not going to improve. There is nothing on the horizon to make it improve. There are no signs of economic growth. Don't pay any attention to any nation's growth statistics, because as long as inflation is being understated and the effects of government spending are being understated, the economy is worsening. And let's look at why. Right now, the so-called inflation rate in the United States, the governmental one, is about 2 to 3%. If you go to John Williams' Shadow Stats, he's saying 11 to 13, someplace in that range. But let's just say it's 7%, and the inflation rate is understated by 4%. There's a thing that economists use to adjust economic growth for inflation, and it's called the GDP deflator, the gross domestic product deflator. Now, look, the GDP is a flawed measure, doesn't really explain whether wealth is being created or destroyed. In the U.S., it's obvious it's being destroyed because our private economy is shrinking. Anything that shows that economic growth is increasing by 1 or 2% is fraudulent. It's simply a result of government spending of funny money being printed up by the Federal Reserve. So we have a contracting private economy, and wealth is created in the private economy. It doesn't get created in the government economy. We've been through that many times. In fact, the only thing government can do is destroy wealth. This is being replicated all over the world. In China, their inflation rates are huge, much higher than ours. Their stated inflation rate and their real inflation rate far higher than ours. Far higher. That's a fact. Every country in the world where government reports statistics on inflation is lying about inflation. They have to, because if the government puts out real inflation statistics like they used to, or more accurate, back in the 80s, before Clinton and Bush 1 got a hold of the statistical analysis department and the Commerce Department and labor statistics and totally perverted it, if everybody knew their money was losing value far faster than it was increasing, there would be real political problems in the world. So instead, if let's say you make $100,000 a year, the inflation rate's 10%. That means you're making $100,000 at the end of the year, assuming you're still employed, you only have the purchasing power of $90,000, which means that you got a pay cut, a real pay cut, because you're working the same amount of hours, you're getting paid the same amount of funds, and yet your purchasing power, what you can buy with your salary's gone down 10%. You got a pay cut. But no politician in their right mind ever wants you to understand that. They don't want you to understand what inflation is really all about. And the effects of funny money, of inflation, the perverse effects, just go on and on and on. Because if you know that you're only getting paid 1% at best, or 2% in the bank, and you're losing 8 or 9%. So if you have 100,000, you lost 10%, or you lost 8% in a year, which means that your 100,000 is really only worth 92,000, actually 93, because you got 1% interest, or maybe 94. So you've lost 6% of the purchasing power of your money. Who in their right mind is putting their money in the bank for any longer than they have to? Then the country becomes a bunch of gamblers, and you're looking for higher return, a real adjusted after inflation return of as much as you can get. So this is what happens when interest rates are kept artificially low. They have the effect of destroying wealth, undermining savings. They're the antidote to savings, because if you know your money is going to become worth less and less, why save it? Put it into something like gold and silver, which brings me to the final point of this Triple Lutz report. If you haven't bought gold and silver yet, give it some serious thought. You have to do it, because I'm looking at the Kitco chart right now. In the past year, we're talking the past 365 days, gold has gone up $392 an ounce. It's up 29.43%. So even if inflation was 15%, you stayed ahead of inflation by 14% by having a portion of your wealth invested in gold. This point is extremely important, because what we're about to see in the economy and the world is a massive dash, a panic towards gold and silver. That is what yesterday, January 25th, 2012, will mark. A panic out of paper fiat currencies. And I don't care if you're in Canadian dollars, Australian dollars, Swiss francs, euros, dollars, US dollars. It doesn't matter. The world woke up yesterday. Maybe you didn't, but people whose jobs it is to watch their company's money, they woke up. And what Apple, you're going to see Apple buying gold and silver. You're going to see Toyota buying gold and silver. You're going to see Microsoft. You're going to see Intel. Companies that are sitting on hoards of billions of dollars. I mean, Apple is up to almost $100 billion in cash. They're going to be buying gold. And when that happens, all bets are off because there is no telling what's going to happen to the price. Now, look, we could easily see a couple more dips along the way. I don't think they're going to be that severe, but they could be, just like the last hit we saw with gold. But gold was still up 10% for 2011. All right, yes, Treasury bills did better, but long term, would you rather have $1 million in treasuries or $1 million in gold? Not that we all have $1 million to invest in such things, but this is what you need to look at. Companies, the mainstream, I mean, we've seen a little bit of it happen. Northwest Mutual Life, very conservatively managed life insurance company, very solvent, very strong. 3 years ago, they bought $500 million worth of gold. Last year, University of Texas Endowment, $1 billion worth of gold. Every guy out there who understands what's going on with the economy is putting their money into gold and silver. How much you should buy, what's right for you, that's not for me to say. Everybody has different economic circumstances. But look, if you're interested in where to buy gold, how to buy it, or just interested in general financial survival techniques that you're going to need in the months and years ahead, go to KerryLutz.com. That's KerryLutz. Sign up for the free financial survival toolkit. Okay, it's free. I've got links in there, dozens of links to really good sites that will give you great investment insights. There's my list of gold sellers, people who I know are reputable, that don't sell the metal unless they have the metal and they ship in a reasonable amount of time. They're good people. All right, there's a lot of them. I don't get any money from any of those people. There are no sponsors on the Financial Survival Toolkit. I just want you to get it and get ready, because yesterday was a game changer. I mean, it really wasn't a game changer if you've been following it as long as I have, and others like Chris Waltzek and Bob Chapman and others. It was a game changer in terms of perception. The perception of the world changed yesterday. Just go to jsmindset.com, read Jim Sinclair's latest take on it. Pretty much agrees with what I'm saying. Not that I put myself